Hello, good evening. It's Adil Fazal, market analyst at CFDs.com. This video is being brought to you by CFDs.com. Be sure to visit the website and certainly register and open a trading account with them. They do have a 25% bonus offer at present. Alternatively, visit the educational website www.cfds.education to learn more. Okay, US market analysis. Now, before I begin, just prayers go out to those that have deceased today. I think we have an active shooters, should we say, and it certainly seems terrorism related, so that will certainly create a risk-off environment, and that's why we've seen the markets down quite substantially. Okay, so this is not looking good, certainly not looking good at all. Okay, so basically we have the markets currently under severe pressure. As you can see, the S&P 500. If I just bring up the chart of the S&P 500, you can see that the S&P 500 itself has closed that gap at 2080, which I mentioned in my analysis, and registered a bearish engulfing candle. Now, looking at the weekly chart, we failed to negate that red candle, and therefore the bears are still in control, especially with this terrorism fears now that are going to dominate. The markets will be in a risk-off mode. The downside target is looking more or less like 2065. And we may well revisit 2020 as well, based on Miss Yellen's hawkish commentary today. Okay, we look into this in more detail, but you can clearly see that we have this potential now for a H&S formation. So you have your left shoulder there, you have a thrust higher on the head, which is a fake out, and the market's looking for potential consolidation and obviously looking to move lower. Now, we'll see exactly how that unfolds, but for now, let's sum up the actual economic data itself. Now, the economic data was very strong today in terms of the US. We had ISM stronger, we had US productivity came out stronger, jobs data stronger. We had the Shanghai up 2.3% at one point, but that was more or less related to the property sector. But nevertheless, it was certainly higher. So that was certainly bullish in terms of the market itself, and that certainly negated yesterday's narrative of a weak economic data means the Fed will hold off on raising rates, etc., etc., and that certainly did not prove to be true. Okay, so we have that situation, that scenario at present in terms of the market. Okay, now we have Miss Yellen, who was very hawkish in her commentary, and Mr. Lockhart was very hawkish in his commentary, and Mr. William was very, basically all the Fed members were certainly hawkish. The economic data was hawkish, and it certainly negated yesterday's narrative. And hence the reason why you had this market sell-off, and the rally yesterday was very fickle, and it gave up steam very quickly. Okay, so now we have the situation with regards to terrorism now, with regards to California. I think so far we're confirming, or I've reported 12 dead, unfortunately, and the situation certainly seems to be out of control as these gunmen remain active and have not been located as of yet. So it certainly does not bode well. Okay, so going forward. So you have terrorism, hawkish commentary, certainly is very bearish. Add in the fact that Mr. Draghi will not deliver tomorrow, given the fact that we've had reports from Reuters about the macroeconomic projections remaining the same, etc., etc. And the euro obviously does not believe in any further QE either, given the fact that even with hawkish commentary and strong economic data out of the US, the euro USD still holds a 1.06 level, even with weaker inflation data. So bear that in mind. Okay, take all that into consideration. And you can certainly see how the market itself is more or less basically set to fall, set to plunge. Now let's have a look at the actual market in terms of technicals. Okay, so let's bring up the S&P 500 first and foremost. The weekly chart itself still trading within that red bearish weekly engulfish candle, and therefore the bears certainly remain in control. With hawkish commentary adding terrorism concerns, your bias has to be bearish at present. You have a bearish engulfing candle itself, and therefore we're looking at bearish price action in the next 24 to 40 hours from my perspective. You have a potential here for a H&S formation. Having said that, you basically are just consolidating in the red candle below to 200 MA and then looking for potential further falls. Now, a further fall next will be 2070, then 2065, and if you fall further, then you are looking at 2045. Bringing up the 10-minute chart of the S&P 500, we've obviously closed that gap here at 2080. Now the next support zone seems to be 2070, and that certainly will be very, very interesting. Now we do have an unfilled gap here at 2065, though 2050 should I say, that has not been closed, so bear that in mind. Your H&S target on the 10-minute chart is 2105, take it to 2092. So you are looking at 13 or 14 point drop, and that takes exactly to 2080, and that's exactly where we are. Okay, so keep following the news in terms of terrorism, and it's going to be very interesting as to where the markets trade next. Now, cross-verifying the analysis there with the iShares, or should we say the Russell 2000 itself. Okay, bring up the daily or weekly chart of Russell. You can clearly see that we are finding a weakness here now below the 61% resistance. Looking at the daily chart of the Russell itself, and you can see that the market certainly has put in a potential reversal here now, and we are looking at further moves lower. Okay, in terms of the Russell itself, so bearish engulfing candle, certainly weak. 60-minute chart, we certainly have seemed to have broken out this key sideways trading range, and the market certainly is looking to move lower given the fact that we've broken out this rising bullish trend line too. So you are looking at consolidation here before we go down and test lower. So certainly bearish price action thus far. Looking at the 10-minute chart of the S&P 500, and you are looking at a breakout below, and the next level you are looking at is a 117, 118 level on the on the Russell 2000. Okay, now again, looking at the actual Dow itself, let's bring up the Dow and cross-reference the market with the Dow. You can see the daily chart, certainly a bearish engulfing candle, certainly holding a horizontal resistance, certainly looking weak. Looking at the 60-minute chart itself, again looking weak. You are into potential horizontal support, but this market certainly seems to be set up for a H&S formation very similar to the S&P 500, given the fact that you've got hawkish commentary and rate rises coming. Okay, cross-reference that with the Dow Transports as always. Dow Transports very, very weak. Okay, so certainly indicating further weakness, although there is support below, but certainly indicating weakness on the Dow itself. Okay, so that does not bode well going forward. Okay, the Nasdaq itself. Bring up a chart of the Nasdaq. Okay, Nasdaq itself has confirmed double top resistance and therefore remains weak. Okay, given the fact that it's rejected that zone itself. You have an unfilled gap below 2065. Now that is, or should we say 46.65. That is the level that I'm targeting. I'm currently short the Nasdaq, just to make you aware. We do have this diagonal trendline support, which I certainly am privy to, but given the fact that we have terrorism concerns, etc., and that will create a risk-off environment, you are looking at 46.65 being closed. Once that's closed, then obviously we'll see whether or not the markets can hold the actual support itself. If it does continue to move lower, you have support at 46.55 as well, so bear that in mind. Okay, so Nasdaq certainly weak. Cross-reference that with the semiconductors horizontal resistance, therefore weak, and certainly supports to move lower on the Nasdaq. Biotechs certainly remain weak. We do have the H&S formation on the Biotechs. So again, certainly very weak pattern for the Nasdaq, and confirms a bearish pattern on the Nasdaq itself as well. Okay. Okay, so that certainly seems a scenario at present in terms of US markets. In terms of the dollar itself, the dollar, I've explained that we did have a late reversal in the dollar itself, but given the fact that the 10-year, let's bring this up for you, bear with me. Okay, so it's the daily chart, the 10-year obviously approaching the 50 MA. So the 10-year itself is now potentially putting in a bearish candle as well, given the fact that we've had this weakness, etc., on the dollar, and you are looking for the bond market, the 10-year certainly starting to fall, and that will obviously cause the actual yields to certainly rise, and that will cause help the dollar itself rise as well. Okay, so certainly interesting to observe this in terms of the price action itself. Looking at the 60-minute chart as well, certainly is looking very, very weak. Okay, now the actual Shanghai, we all know, is bearish consolidation, so any move higher overnight. Again, Nikkei is into resistance again. That will certainly confirm the weakness on the US markets, given the fact that the Chinese markets are into resistance, given the gap fill on the Nikkei and the break of the rising contracting wedge, and the bear flag on the actual Shanghai index, as you can see here. Emerging markets certainly remain weak, especially with regards to Ms. Kieran's talk of a rate rise, and that will certainly cause even more pressure, and you have the unfilled gap on the emerging markets that need to be closed. So all eyes on the emerging markets going into tomorrow's session. So terrorism concerns and hawkish commentary is a double whammy for equities, and therefore you are looking at a risk-off scenario in the next 24 hours. Trade safe. Be sure to visit cfds.com for your trading needs. Goodbye now.